Hello, everyone. How's everyone doing today? I'm Dale Pinkert. Nice to meet you. Want to welcome our viewers on investing.com. Hello, Shahab. Everyone doing okay? So there are a couple of instruments I want to cover today, a clarinet and a trumpet and a saxophone. Everyone ready for that? Okay, so I'm showing you silver. So, I just want you to get the picture of what's going on here because I actually believe that there is an impending high in gold. So see how gold's making a new high? It's taken out this high, whereas silver hasn't made a new high since all the way back last year at 1950. Here's our second high. This is when gold was making its first high. So this was the first divergence between gold making a new high, which gold did here, and silver did not. And here we are again, and we haven't even taken out this high. So the potential exists, and I'm have some price levels. We've been talking here in the house about 1625 or about $9 away. It's very possible we don't even take out this high of 1886 if that happens. So I'm going to really be monitoring this high. And even if it achieves it and goes for some stops, it's still going to be a lower high. So, uh, what would be your preferred short if you want it to be bearish to metals on a relative strength basis? Hi, Ingmar. Any guesses? Yeah, not many people are going to be shorting it. I think gold's DSI is 90 now, like the dollar is. So anyway, to me, they both could work, but your relative weakness obviously is silver. Okay, so and these are my ideas. I don't think anyone on the team is. In fact, let's take a look at what Forex Analytics has to offer here. Get rid of this. Let's see what. So if you want to know what everyone's thinking on the team about silver, just like all the other instruments, all you have to do is scroll down. And Blake, you interrupt if we want to get going and do your coverage, so you could go ahead and
You
trade.
you you got it for just a few minutes.
Okay, buddy. So you could go to silver right here and look at bullish, bullish, bullish. Only one neutral is Andre for the harmonic. So you have all these bullish counts. So let's see what Greg is looking for. Well, look at that. You know, uh, he's showing it completing underneath this high. So Greg has got this at 1871. What a convenience to have this and have all these different looks because I hadn't looked at this yet. It kind of lines up with the narrative I'm talking about. And then there's one other thing I want to talk about. I was talking about that it was my contention that Euro Pound would bottom before the Euro, and it's actually been able. And I talked about it down here. I thought there might be one more drive to take out the low of the move, which was here. It actually held it by about 4 pips and it did not make a new low. Now we're back over this little throwover action here, starting to look like a double bottom. So if there's still another, say, 100 pips to the downside in euro, I'd be very interested to see where EG is should that happen. My guess is that we don't make a new low, even though euro does, and that'll be kind of a green light for trying to bottom pick the euro and top pick um, the dollar. Okay. And thank you, Mirko. I know a lot of people are going to say that. So thank you for the good wishes. And S&P seemed to be trying to roll over a little bit here. You have to get through this green moving average. We did make another new high in the afternoon session, but the divergence is still glaring in the 4 hour and was even rejected at 70 on the 1 hour TF. So that's all I have to say today. But watch at Euro Pound and Dixie. I'm looking for par 22, which is actually one of our guests from last week, Peter Goodburn's number, par 22. So write that Dixie number down and consider becoming a member so you have all of this analysis at your fingertips. You know, you want to know what everyone's thinking about silver. Here you go. So here we are, a different view from Blake showing this huge channel, and could be, oh yeah, a breakout over 1850. So
And,
one of the best.
notice we're nudging our head right up against that
We're
level.
there.
Yeah, I mean,
We're there right now, huh?
yeah, we really are.
Okay, go ahead,
All
bro.
right. Good morning. How are you?
Good,
Uh,
Blake. I survived the Democratic debate.
I did not.
You know, if this is all we have, we're
Yeah, I mean,
doomed.
it's. I heard. I got a lot of text messages regarding it, just because the guys in the office are paying attention to it. You, you, we have a variety of political opinions
Yeah,
in my office, but most importantly, it's the question remains: is there a Democratic contender that could
yeah,
challenge Donald Trump? And the answer to that question right now is a resounding no. And if it gets to a point where the market starts, people start going, wow, this candidate is really a threat to Trump, then that's when the markets start taking notice. And so that's why it's so important, for everyone. I had a friend that came in from Texas that visited. He's in town for a couple of days, so I went and had a drink with him last night. So
I'm guessing he's pretty conservative.
I'm sorry.
I'm guessing he's pretty
Well,
conservative.
actually, he's from here, but he is
Uh,
extremely conservative. He
okay.
always has been. So that's kind of the nature of him.
He
But
wants Texas to secede from the
yeah,
Union.
no, I think he fits in great there, for the most part. But anyway, but look, we got to really spend some time talking about the yen. The yen continues to blast higher, and as I told everybody yesterday, um, on the daily roundup webinar, big white bars are usually followed by other big white bars. So that is exactly what happened last night. Unfortunately, I didn't take advantage of the dip. I was trying to get a buy-in below 111, and we just never, got there. I had orders in the 80s, never got there. The dollar yen continues to blast higher, but there's uh, the conversation, and FX Macro. He's tweeting a lot of this now, but I'm gonna give you the gist of it. The government pension fund in Japan is the world's largest pension fund, and they're doing a reallocation from what we hear, and it's a big reallocation too. It's like I'm talking hundreds of billions of dollars could be difference from what the market is expecting, and that's the amount of money that they have to buy in government bonds is what's creating this massive buying in the dollar yen. So um, just the fact of the matter is, don't stand in front of this move, not right now. And this could be completely different from how we see the yen moving forward, even in a risk off environment. I think if we see a risk off environment, the yen may not be the go-to trade right now. You might have to look at other things like commodity currencies, which you see the Aussie just buckled yesterday after the employment numbers. So just keep that in mind when we're moving forward. I've got bids in the dollar yen that you know I was 15 pips from getting hit, and then we just bounced right back up again. So the dips are very shallow. Um, but today I'm hoping here. This is intraday. I'm hoping we make a lower high here, does something like this. I'm just going to draw it out for you, and hopefully we get something like this, and then a continuation. So, a lower high, brings us back down to challenge some, previous breakout points, and then allows for those of us that are looking to pick it up, maybe pick it up at a little bit better price down here. That's what I'm looking to do. Whether or not we get that is to be seen. All right. I did. I was long dollar Canadian overnight, and I owned it in the 20s. I just sold it in 62 this morning. We are coming out of a big, or we've got a big pennant here. The 200-day moving average is continuing to hold with the dollar Canadian. So I think this is the pennant that'll eventually take us above the 133.30 level. So keep an eye on the US dollar Canadian. I think this is one of those that you want to be considering being on the long side, especially if we start breaking up into the 80s. We're at 132.50 right now, and I'm playing this through different cross rates. I've got a Euro Canadian on from yesterday that I've been
Your
playing.
US dollar MEX has a heartbeat, Blake,
Yeah,
this morning.
the dollar Mexican peso also is challenging this wedge resistance, and you got to pay attention to this because um, if we start to see a squeeze higher in the US dollar Mexican peso out of this wedge, that's another indication that we might have a little bit of risk off too. So again, there's different ways to play risk off, and I don't think the right play at this moment anyway is long yen, because of what's happening with the pension fund out of Japan. So if you're going to play risk off, you got to look at like, okay, well, what are the big carry trades out there, and where can those unwind? And you're staring at one of the big ones. It would be the Mexican peso. We would see peso weakness and euro strength more than likely. So like the euro Mexican peso might be a trade where you see a significant squeeze in this pair as we're down at wedge support. Now these are very uh, Steve said I'm lagging a bit. Can you guys do I sound like I'm lagging a little bit here?
You
Anybody?
sound fine, I think.
Okay. All right.
I insist
Everybody's
you're lagging a little bit.
that might be you, man.
I don't think so because I checked my line before I told you.
We have
Mm,
three people
Chris-
saying it sounds
Chris-
fine. So there you go.
Chris is also saying a little bit for me.
yeah.
What?
Well, that means I'm done. You guys have to take over then. No, I mean, I don't know why. I'm running everything that I normally run. So, but what I wanted to say about like the Mexican peso is you've got to be really careful about trying to hang on to these trades for any extended period of time, because they have a very big carry to trade against them, to trade short pesos. So you just it's like you want to trade it like intraday or over the course of a couple of days if you can get a move, but try not to take these for any extended period of time. Now look at this dollar yen; it is unstoppable. I'm so irritated. I'm just getting hit. Ugh. It's yeah, we're seeing that strong move up again. These dips are very very minimal, and one other thing I wanted to mention about the dollar yen, there are a lot of options right now being written for 120. Now you often see that, you know these big explosive moves. You'll start seeing people targeting much higher levels, hoping that this is the big one. Well, frankly, as my analysis went yesterday, and what I was talking about yesterday is we've broken some pretty big levels. This to me seems like the dollar yen. If you look at this is just a big daily chart. If you are a harmonics person, and you think about what we've done here, like you can do something like this. This is very, in my opinion, very realistic, to target up towards, the 120s, and it's not going to, obviously we're not reaching for there like tomorrow, but what I'm going to be interested to see is if we do have, like, let's say the stock market comes off a little bit, You know, 'cause the coronavirus is, you know, you got to start being really careful watching these, you know, outside of China numbers, where we're going to get some real hard data, you know, whether it's or Korea or Japan, Singapore. You know, you start seeing these numbers in this COVID coronavirus issue, if it continues to manifest a little bit. If we see some equity market selling, how does the yen respond? My 2 cents would be, you do see a little bit of a, you know, yen strength, which might pull us back, you know, 15, 20, 30, 40 pips, but then you're going to see it that just act as a springboard. So I would be using dips in the dollar yen to be a buyer, as long as we remain above, you know, 110.50 to 111. I don't think there's any real reason to be on the short side. So I'm looking to buy dips in the U.S. dollar Japanese yen if I can find them. So the question is, where are they going to go? And that's when I have to start looking at giving you examples of what you see here with the dollar yen. And also, just to let you guys know, is I'm legging in the positions too. I'm partialing in, because the last thing you want to do is get down here and you get a pullback to, like, let's say 111.80, and then you get a full size position. Then you get a blip down to 111.60, and now you find yourself in a little bit of a pickle. So what I'm doing is I'm trying to layer myself in to a trade on dips with the dollar yen. That's my goal today, and hopefully the market allows me and you some opportunities here, because these nonstop movements, these movements that just, you know, continue. We saw it in the euro, right? We saw this in the euro. We just get this, you know, full on move, and it just doesn't give you anywhere to get in. And we're seeing the same thing manifest with the USR Japanese yen. The dips are shallow, and as long as the dips are shallow in the dollar yen, that means that the rally is probably going to continue. And I know there are traders out here that your natural instinct is going to be to fade this move. I don't agree with that trade at all in the least bit. I think this is a very strong impulsive move that you have to be either get on or get out of the way.
Yeah, there's some long-term USD yen Elliott counts that could take it up into the 120 handle.
Yeah, I don't think that's
122, 124. I mean, what's that look like on a weekly or a monthly? I think we've been there. So.
Well, yeah. So,
Yeah.
you know, as I was pointing out, and you stepped away from your desk.
Oh,
there,
okay, bro.
Dale, I was pointing out that this is not, and would not be founded, you know, to see the 120s.
Yeah. Okay. Wow.
But yeah, you also have to imagine, as we extend our move higher in the dollar yen, the volatility is going to increase. So therefore, you know, you have to watch your position sizing. You can't be in full size positions if we're whipping around 50 pips. I mean, you can, you know, maybe get lucky and be on the right side, but if you get stuck on the wrong side because you got caught up with a little bit of, you know, the fear of missing out, or the FOMO bug, and you chased it up 50 pips and it drops quick 50 pips on you, you know, down, you know, $5,000 or, you know, $5,000 or $500, depending on what size you're trading, or $50, and really quick, you know. So you have to be really careful about the position sizing that you're taking when you start to see this increased volatility in the market. They give us a lot of opportunities, but you just don't want to be stuck on the wrong side if it pulls back, you know, 50, 70 pips on you, which after a move of 200 pips in 2 days, you know, that's not going to be uncommon to see a 50 pip drop really quick, right? So that's why I put bids out, and I try to get pieces. Hey, again, apparently DK is saying the same thing. I am a little laggy here. So let me get some comments from Steve and Stelios and see what they have to say about what's happened overnight. Hey guys,
Blake,
good morning.
I just wanted to make an important comment about the USD yen, and it is, people that might not have been trading when we had the big period of depreciation, of that strong depreciation of the yen. Something that was happening when we were having a strong depreciation of the yen, and if this is another leg higher,
Yields are going up.
it's actually no. I want to comment on something else, Dale. That usually when you have that happening, which means that almost every currency is appreciating against the yen, then you shouldn't be expecting these currencies to rebound much against the dollar. So usually when we have big periods of yen depreciation, you see everything appreciating against the yen, but more or less doing nothing, or remaining under pressure against the dollar. So my point is, this is not a period to be looking to be long currencies against the dollar, because that simply might not work out.
Yeah, it's quite possible. The flip side to that is how much of an accelerated move do you get in some of these other yen pairs, like let's say the euro yen, for example.
Yeah, the euro yen went vertical.
Yeah, you get a rally in the euro yen, and not only is the yen going to be weak, but the euro US dollar will stay relatively big too. So those are things. Those are things.
Yeah,
to
just
consider.
look at what the euro yen did, and euro USD has done nothing during the past 2 days. It's like
Right. So good points. Well, Steve, because I'm lagging, I'm gonna turn it over to you a little bit early. But before I do that, I want to mention, if you guys are Forex Analytics subscribers, because I know some of you guys are listening in because you're on investing from investing.com, and welcome, by the way. We are beta testing our active pattern and play via MetaTrader 4, MetaTrader 5. So if you are a premium subscriber to Forex Analytics, you have to be premium. We're opening up beta testing for you, and if you want to, ask about that, you can get involved just in our chat box right here. Just get involved in you can talk to our support staff and tell them that you are interested if you are a premium subscriber, and you could use the beta product for the active patterns in play automated we're testing for MT4 and MT5. So Steve, with that being said, I'm going to pass it over to you because I'm apparently lagging. So
yeah, stop using that AOL dial-up for
it is I got the
or at least pause your downloading porn movies while
something like that.
Oh yeah, Steve, stop projecting.
All right, guys. Thank you.
Thanks, Blake.
Right. See you, Blake. Good hunting.
Bye-bye,
Hey,
Blake.
Stel, Steve.
Hey. So, first of all, I wanted to quickly mention, Blake talked about silver and metals. And, it's something that I've been thinking about for a while. You know me, I've been long silver for a while now. And as with every trade, whenever I have one, I always try to understand what the disaster scenario is. So what is going to cause metals to drop a lot? And the answer actually is, in the short term, a few things can make them drop. In the long term, as long as we have inflation, pretty much nothing. But in the short term, you have the classic example, yields rising. So people say, oh, gold and silver are not yielding anything, I'm going to put it on bonds and get 4%. Well, I don't think yields are going to go anywhere at the moment. Well, definitely central banks are not raising rates. Yields could move, obviously. That will reflect different things in terms of the global economy, but that's not doing anything. The other short-term factor.
Still, my assumption is that even if yields move to the upside, actually, if yields end moving up to the upside, probably gold and silver are going to accelerate to the upside, because under the current environment, the only way yields can move to the upside is if the central banks lose control of inflation,
Yes.
because we know that they're not going to raise yields on their own. So if that's the case, still nominal yields might be increasing, but real yields are not going to be increasing. Plus, we will have the extra element that we're going to have huge jitters about the health of the financial markets and the economies. So I think that under the current environment, the only scenario in which yields can actually rise, it's going to be even better for gold and silver.
Yes, I don't disagree. I was going to say the other factor that can push metals sharply lower is the dollar strengthening. And interestingly, it's been strengthening over the past, days, weeks, and the metals are going with it. So that's another thing. I think the only real scenario where you can have a short-term big drop in metals is a scenario where we experience a similar thing as in 2008 in the crisis. If you remember, mid 2008 to early 2009, silver dropped almost 50% from what I remember. It was like up at $20 and it went down. The bottom was like 8.5 or something like that.
So a recession would take it down because
yes,
it's
but
industrial. Okay.
I have to intervene here and ask the question: what kind of a recession?
yes,
Well,
it
yeah.
depends. Yeah.
Yeah,
But
because
if
if it's a deflationary recession and not a very scary one, which I doubt both of these premises, yeah, I mean precious metals can go down. Now,
well,
if
how about the yen going to 122, 124? I know there's a disconnect with that correlation, but sometimes
Yeah, there
correlations
is.
disconnect
and then
and then
reconnect.
reconnect.
Yeah.
So I mean, that's the one thing I see that could be a fly in the ointment for precious metals is really the event of the week is the US dollar yen breakout.
Undoubtedly. I mean, it's the biggest technical event we had in FX for quite some time, right?
Right, and these metal moves aren't early on.
Yeah, we're talking about we were watching a distant trend line. We're talking about a multi-year trend line, and
you and I talked about 16 and a quarter in gold too, and we're not quite there yet.
And the most important question, for somebody to ask here is the following: it's a breakout from a multi-year trend line, which we can now perhaps draw this like that. So which followed an unprecedented depreciation of the yen. So what
this
if
whole thing's been corrective?
Yeah, exactly. So what if this is the beginning of that? You know what I mean?
That'll be $13.20 gold and $15 silver is my notes for Pinker. Okay, we'll see. You don't have to agree now.
You keep bashing my silver position. Thank you, Dale.
It's a 15, man. It'd be a great buying opportunity.
Dale, I'm scared of saying that because it's a very, very scary sentence to say in the markets and in finance. But I almost see no scenario under the data that we currently have that gold and silver can really be sold that much, because fundamentals.
How about if China, which has been a huge accumulator of gold, under some financial duress, liquidates it? How about some central banks selling because of the coronavirus to protect a falling yuan?
Could happen, although every time a central bank has sold gold in the last 10 or 20 years, every time it seems to be the bottom.
The last idiots that did that were the British.
Gordon Brown, yes.
Gordon Brown. I mean,
$200.
At $200. I mean, that was probably the most.
I remember that.
The most idiotic central bank move I've probably ever seen.
Yeah, but back then people were saying gold doesn't work. It's an archaic relic. It's a paperweight on your desk. I mean, gold, and just like now, the VIX is broken.
And the paperweight multiplied by 10 within 10 years after selling it.
It was a great paperweight.
Yeah, it was a great paperweight, and that was probably historically one of the worst trades ever. And I don't know how you can hide from
I'm in his hedge fund.
We have data, by the way.
Gordon
Let me pull
Brown,
this here.
the Gordon Brown hedge fund. We try and short the bottom and get long at the top.
So initial jobless claims exactly as expected, 210 versus 210. Even revision was a non-event, revised to 2.6.
Yeah.
Philly
Fed is the main number, really.
Philly Fed is the main number, which
we haven't had it yet.
Yeah, it isn't out yet. US continued jobless claims also, as expected. So, all those non-events. Let's see what the Philly Fed is going to give us. Previous reading was quite a strong one at 17. We now expect this one to be at 12. So no need to keep this here. I'm going to tell you once it gets released. I'm going to let you know.
Yeah. Okay, a couple of other things I want to mention before we go to the charts. First of all, we had the FOMC minutes, which were kind of, I would say, marginally more hawkish than expected. So they are saying that the current level of monetary accommodation is going to be appropriate for a time. That's what they said. So,
like 3 months.
Yeah, a week is a time,
Yeah.
And they expect economic growth to continue at a moderate pace, which is the current. They've been saying it for a while. Interestingly, they said that maybe they should resume discussions for creating a standing repo facility.
Whoa, Philly Fed.
Oh, what is it?
36
wow.
versus 36.7 versus 12 expected. Wow. So yeah, that was a blowout number, literally. Yeah. But mysteriously, the market doesn't seem to really take a notice.
Let's have a look at the employment is lower, new order is higher, prices paid is lower. Okay. It's a mix in the subcategories, but the headline number is big.
Yeah, the headline number is like, more than 3 times what was expected.
Yeah.
Okay. So what were you saying, Stelio?
Yeah, we're talking about the Fed saying that they're going to create this standing repo facility. This not QE might become permanent.
Of course, not QE, yes.
So, it's something that has been needed on a daily basis, right, for weeks now. So
because the markets are very healthy.
Yes. Now, data-wise, we had Australian.
It was fun because Kaskari was trying to argue the other day on Twitter that the not QE is not actually propping the markets higher.
Yeah, exactly.
So out of curiosity, I laughed, of course. Out of curiosity, I went immediately to see what people were answering to him. So everybody was like, okay, if it's not proper, if you're assuming it's not propping in the market, let's make an experiment. Why don't you let the repo market settle wherever it settles, and let's see what happens in the market just for 2 weeks.
Anyway,
because the repo market is going to balance itself at some level, right?
Of course.
I mean, this is what capitalism and free markets do. I mean, there is a specific interest rate for which there is going to be a balance of demand and supply, but they don't want to find out what that interest rate is.
Mate, price discovery is long gone, but Anyway, I mean, yeah.
And once the market finds out what that interest rate is, and they realize the risk element that banks themselves believe that there is in the system, stock markets are not going to be happy about it.
Yep. Okay, so what else? Oh yeah, a couple of other things to say. We had Australian employment numbers marginally better than expected. Not enough to halt the drop. All commodity currencies are down today against the dollar.
Yeah,
the dollar is pretty strong.
Speaking of which, Stelio, Aussie at the lows of the day, which are also 11-year lows.
Yeah,
so
the Aussie
Aussie is drilling for oil.
I mean, after this break, I mean, that zone you have at the bottom, I mean, breaking that's it.
Yeah. I mean, that was a multi-year breakdown. You have to go back March. Actually, it's going to be in a few days, exactly 11 years. So March 2009.
Yeah. Wow.
Probably
I-
not a very bullish
I
sign.
remember those days.
Oh yeah.
Okay,
Me
we
too,
also
vividly.
had we had UK.
Vividly, but as I've said many times on this webinar, I remember even more vividly these days between like 11 and 13 that everybody was, waiting for the Aussie to break down. It was above parity and everybody was like betting it's going to break down. Back then, there was a nice positive carry in holding the Aussie against the dollar. So a lot of people were blowing up their accounts, being short and hoping it's going to break down. And after all those people had their accounts vanished, then it's when the Aussie actually broke down and has depreciated like so strongly since.
Yes. Okay, so what else? We had UK retail sales today, better than expected all around, core retail sales as well. The pound doesn't care. And I did say yesterday morning in the chat room, we had a discussion with a few of our friends there, and I said, look, I think we had a lot of positive sentiment from the UK from the time that, well, actually before that, but from the time that Boris Johnson won the elections, actually from the time that the market started pricing him winning, and it was a good win. He has a majority, he can do anything he wants. So I said, look, the market is priced in, is moved quite a bit. The sterling, euro sterling in particular, I was talking about, has moved from over 90 to what's 0.83 it was yesterday morning. I said, look, I think now going into the rest of this year, and because there's a deadline at the end of the year for any trade agreements with the EU to be formed, we are going to probably edge higher in euro sterling as the uncertainty comes back. And you know how markets are, they come in waves. So I said, look, I think the trade now is to be, I think euro sterling is going to be edging higher going into the end of the year. And when something gets done, which I think eventually it will get done, then we get a proper leg lower. So, and that was at the 83 yesterday. Now it's already at 84 or close to. And I think that's a general direction going forward, at least for the immediate future, the next few months. And
speaking about that, yes, the euro pound has rebounded, quite nicely. Let me pull it up. But on the other hand, the pound is doing quite fine against the dollar. I mean, given the dollar's strength, given the fact that we had a big leg higher, I think that so far the price action we're seeing in the cable here, it's doesn't show anything else than just being corrective. So I don't know. I mean, I'm still positive. The cable. Now, I wouldn't be buying it today, but I would be looking, for a reaction at 127, 127.50, as I was saying some time ago, because I like how it's trading after this move higher. I don't know what you think about the pound against the dollar.
I'm actually, if you look at my if you look at the macro analysis on cable, I'm actually bullish cable. I think I think it's very difficult to call it up, but I think the dollar is very stretched, and there is a possibility that it might continue going higher. But I think overall, I think chances are for euro pound to go higher, but I still think I would be looking to buy dips in the cable. I agree 100%. I
same
agree
here.
100%.
Here's the dollar, by the way, since you mentioned it, and the dollar actually hit today this channel trend line resistance. And given the fact that from the beginning of the year we've seen a 3.5% move higher, I think that at least some type of a pullback is warranted from here. I mean, I think this is the area that you should start looking for a pullback. If not from here, I think it's very tough for the cable to make it above 150 without seeing a corrective move lower. So anywhere between here and 150, I will be looking for the cable to, for the DXY to actually pull back and at least pare back some of its recent gains. Now, anything else, Elio?
Yeah, one last thing. I mean, the usual thing that's been on our minds for weeks now, the coronavirus. We had more Apparently, we had more cases outside of China, which is a bit worrying. We had more cases in South Korea and Japan. But inside of China, there's a sharp drop in new cases. But if you look at the details, they've changed the criteria on how they count them. So I don't trust any of this.
out of the playbook from the playbook of inflation.
Yeah,
What do you do?
yeah.
Just keep shifting.
The
You know,
goalposts, yeah.
yeah, keep shifting the way you and the methods you calculate it, and don't worry, you can keep understating it. So probably they've been using the same kind of technique to understate coronavirus incidents. Okay, interesting.
Yeah, I mean, personally, I'm looking at how this thing evolves outside of China,
Of
because
course.
China, I just don't trust the numbers.
Yeah, and you know
And
what, guys? What a perfect scapegoat coronavirus will be for all the mismanagement of central banks. When bubbles pop, they could blame coronavirus. There's all kinds of things that they could use the virus as being the scapegoat for, which in reality it could cause problems, but it's going to mask what may have happened anyway. I mean, Steve, you were looking for a recession sometime, maybe this year, right? You said there's a pretty good chance.
I was looking for a recession to happen last year.
Okay.
And if you remember, and I think I would have been proven right if they didn't completely reverse monetary
Okay.
policy and come to the rescue.
Okay. So anyway, the Fed.
I think that just bought the market some time. Now we're going to find out how much time, but usually from a seasonality perspective, the period after presidential elections, the year after the presidential elections, is traditionally the worst.
Okay,
So
we
usually,
could hold things together again for a year. In that, whenever it happens, this is the perfect excuse for why everything goes wrong. That's what I'm saying.
yeah, a lame
Yeah,
one,
yeah.
but an excuse nevertheless.
We'll see. Yeah. Anyway, it is something that will give
A lame one in the
politicians
sense,
cover.
a lame one in the sense, not that coronavirus isn't something, or any kind of disease, that might be a pandemic, isn't something, serious, but the fundamentally the economies are broken since
Yeah.
years and years ago.
By the way, Steve, while we were talking, we had Canadian numbers.
Canadian, yeah.
Misses in housing and ADP employment. So
housing price index lower, and what else, Elio?
ADP non-farm employment quite a bit lower.
Okay,
So,
that's actually good, because as you know, I'm looking for higher prices in USD CAD, and I already like very, very much today's tweezer bottom exactly at the 200 daily moving average. So here's the daily view on that, and here is the 4-hour view on that. So on the daily, as you see, so far we seem to be forming a tweezer bottom exactly on the 200 daily moving average, and on the 4-hour we seem to be attempting to break above this pennant. So in any case, I do like this price action, and as I've said since several days ago, I do consider it very likely that the USD CAD is actually going to manage to break above 133.25, and I think that when that happens, the pair should accelerate to the upside. I would be conservatively looking for targets roughly at 135.50 if that proves to be the case. Time to sell USD SEK to play dollar weakness, Gautam is asking. So let's have a look at USD SEK. Actually, we have a lot of questions today, and some of them are in some exotic currencies. First of all, USD SEK exactly on top of confluence of resistances up here. You can see it, channel 78.6% fib from the highs, horizontal support resistance area. So I mean, overbought on any time frame from the daily and below. So do I think that it's rather getting close to see a pullback here? Yeah, I absolutely do. Now, do I think that this is going to be like a big move lower that's going to begin? I think that you need to take it you need to have a conservative approach. So to begin with, I would be looking for a pullback towards at least 967, which is a good support resistance area, and we see what happens from there before we determine what else. But yeah, I mean, this is a good area for USD-SEK to actually start turning lower. Let me go back and start the questions from the beginning. Was the Japan Pension Fund News a project confidential for the last day or two? Most likely, yes. Certainly explains why the pairs were doing what they did. These things are always planned in advance. And as you very well know, the JPIF, the Japanese Pension Investment Fund, as it's called, has a lot of people on board. So you know how it is between friends. I mean, people very high on the food chain of, um, managing money, obviously, were aware. So I'm assuming a lot of people were positioning in advance. Now we have a question. I'm going to address it because it's somewhat relevant. USD against, the South Korean won.
Somewhat. We
USD,
actually got a somewhat relevant
KRW.
question.
Okay, I didn't delete it. KRW.
We get
There it
relevant
is.
questions all the time.
Yes, and I meant to the coronavirus. So the question was,
Yeah.
what's happening with this one? And the answer is that, first of all, it has spent a long period of time, consolidating in a broad range. You can see it here, but if you look closer, this looks like a legit breakout from this triangle. Perfect.
Kenny likes it.
Yeah, Aliki did like it.
He did. Yeah.
Perfect.
He said one.
See.
She said Korean one.
Yeah. So perfect A, B, C move lower, and definitely another leg higher has begun. So even if this is a three-wave move, which it's likely that it isn't, a minimum target would be up at 1,224. So let's say retesting that high over there. So that's what I think is happening with it. Now, GBP number is positive, but still going down. Why? If you remember, it's one of the first things I said. It mostly has to do the fact that the pound is not doing that well against the dollar, mostly has to do with the fact that the pound is doing very decently against the yen. And if you remember, I mentioned that yesterday, that we were actually just breaking out from this. So I said yesterday from retesting this, we broke out last week. We came down, we retested this triangle, and yesterday we started accelerating the upside. I said that pound yen looks very decent to me for more upside because it consolidating within a triangle, and the breakout from this triangle looks quite good. So when the USD yen is going vertical, that's what you should more or less be expecting. As I said before, currencies to be performing very decently against the yen, but more or less not doing that well against the dollar. If UJ goes to 120, where does that put gold? We already gave our two scenarios. As you heard, Dale is a lot more pessimistic about it. Steve, unless the currency is gold, silver, I don't remember. Yeah, I didn't see your comment when I was talking, so I don't remember what I was saying at that point. Steve, my contention is that USD yen is a simple catch-up USD strength. It's a great opportunity to sell, expect dollar to be weaker going forward as focus shifts to Fed rate cuts. Japan expect exporter repatriation into year end and risk of haven flows as SPX corrects in coming weeks. Thoughts? Yeah, all that has to happen at the same time to see a correction in the USD yen. Yes, usually the seasonality effect which you mentioned, the repatriation, can play a role, but we definitely need to see some risk off to taper that off. And if this is the beginning of a much larger move, let me historically take you back to the big uptrend of the USD yen and tell you that during this period, from the end of 2011 to summer of 2015, in essence, that was a one-way train, right? I mean, we only had periods that the yen was going vertical and periods that it was consolidating. So, if this is the beginning of something as big as that, and we're saying that because we're now breaking above a multi-year corrective question mark triangle after this like huge move higher, all that isn't going to play much of a role, because during that period, USD yen was more or less going ballistic, irrespective of, if we had repatriation, if we had risk on or small periods of risk off, etc. So, I would be very, very careful trying to fade this USD yen move, because this breakout can prove to be like an extremely, extremely significant technical event. And, I've done that mistake once in the past, which was very stupid. I was actually trading the USD yen back here because I strongly believe that this was a bottoming formation. So I remember very vividly that I had actually bought USD yen at 77 or something like that. And then it started going vertical, and I was like, so happy with myself, with how pro I am for being long, when everybody else was in doubt, because I want to remind you that the USD yen was in a multi-year downtrend, right? And then I took profits like 200, 300 pips higher. I don't even remember anymore, thinking, that was an excellent trade going against the crowd and actually, making that. Now imagine when you're making 300 pips and then, this thing goes from 74, 75, whatever it bottomed, to 125. Of course, I traded it again for some time, but there was a big period until I was convinced that, I let it run, thinking that it's going to give me an opportunity to rejoin by pulling back, and it never did. So then I felt like really, really stupid. Of course, that was, an unprecedented kind of move for FX. I mean, these things you don't see every day, but still. PMs went down with stocks during 2728 crisis only because traders and investors had to liquidate their PM positions to be able to cover their equity margin calls. Yes, that was one of the reasons, but not the only. One extra reason that this happened is because the Fed was quite quick to act after Lehman, and traders were quite naive to believe that the unprecedented monetary intervention is going to be something that's going to be in play only in the short term until things settle down. Now, I said since then that I believe that this is a one-way street, and it's not going to be reversed. But a lot of people, actually believe that the Fed has an exit strategy, an exit plan. Personally, I didn't believe they had then, and I even less believe that they have it now. So I believe that the only exit strategy from this monetary roach motel, you can call it, is things blowing up eventually. But back then, at least, people had, let's say they had an excuse in being naive, because that was the first time this was being tried in decades. So they might have thought that, okay, it might be temporary, things might improve, and then monetary stimulus might be slowly and steadily removed, and everything is going to be okay. But of course, that's not the case. Guys, what about Ethereum and Bitcoin in this scenario? Which scenario are we talking about? Which of all the scenarios? Because we've discussed quite a few scenarios. Having to do with Bitcoin and Ethereum in general, though, I have to tell you the following. First of all, they both look bullish for the time being, okay, because they've both broken above, significant technical formations. Now, if we're talking about a longer term scenario and what's going to happen, for example, under a recession scenario, depression scenario, or whatever, I would be very, very careful, because I remind you that cryptocurrencies have not been tested during a recession period. So there is a lot of speculation, and a lot of people are hoping that Bitcoin, for example, is going to prove to be digital gold. But what kind of proof do you have for that? Not you, I mean, anybody else. What kind of proof do we have for that? Do we have historical proof? Absolutely not. So personally, I'm extremely skeptical about the longevity of those cryptocurrencies under such a scenario, because in my mind, they remain the most speculative, let's call them investments out there. So usually under stress, those are the ones that are liquidated first. So I would be very, very skeptical. I mean, I wouldn't be surprised if they get destroyed during a period of crisis. Now, crypto funds are claiming that they're going to thrive under such a scenario. I'm not saying it's impossible. I'm saying that I'm extremely skeptical, and without having any historical context, I think that even if they prove to be right, it's going to be more like a lucky guess than anything else. And personally, I don't want to be guessing, casino style. I know what's going to work fine under a high stress scenario, because it has been working for 5,000 years, and that's where I'm going to be invested.
Guns.
You have a valid point, actually.
All right. Give me
But
your
actually-
gold.
But actually, if you have gold, you can hire as many guns as you like.
Yeah, until they say, why don't we just take it from this one guy? Yeah, anyway, so why don't you wrap it? Lydia's not here yet, but take a look at VIX, Steve. The other
Yeah.
broken instrument that people say doesn't work anymore. And even with new highs, and we talked about the glaring difference with higher
Yeah.
lows here,
Yeah.
it looks like it wants to start coming out of here again.
Let me say it oppositely. If you asked me what is the stupidest trade I can currently be at, I would tell
Short
you being short.
volatility.
Yeah.
There's still
I mean,
plenty of them out there.
If I really hated somebody and I wanted them to have a chance of losing a lot of money in very little time,
Well, who would
that
even
would be
think
my
of that?
suggestion. Yeah, that would be my suggestion. Like, sell the VIX here. You can actually make a little bit to the downside, and with a huge asymmetrical risk, to the upside.
I think there's a guy that specializes in that. He's called the resentful analyst. So his service is to have people lose their money as quickly as possible.
In all honesty, if somebody's short the VIX hoping for single-digit numbers again, I would have to ask them, okay, we're not even close yet. What do you think it has to happen for us to go back to single digits?
I don't know what could bring us back there.
Personally, if you remember, I'm not saying that now. I've made that bet a year ago. I think we're not going back there during this business cycle. As simple as that.
Or if they shut down the markets, there would be no volatility. A market holiday,
Lock
the
it
VIX
down.
would not go anywhere.
Yeah,
We've had market holidays.
But going nowhere doesn't bring it to single digits. It just lets it be what it is, right?
Yeah, the VIX is at 60. Let's close the markets. Okay,
Yeah.
so Lydia's not here. You could keep going.
cryptos investors have different investor base than equity or bonds, so in a recession, margin call on equity shouldn't affect crypto holders.
That's a
Yeah,
decent point.
that is a valid point in the sense that hodlers are not going to be affected by that. But I want to remind you that if we're talking about Bitcoin, mostly Bitcoin, but Ethereum at an extent, we've also started seeing some institutional money pile in. And I remind you that these are very volatile markets and very frequently very illiquid. So even if you have that kind of money pull out violently, might be enough to crash it. So although you have a point, I don't think there needs to be a lot of money coming out at the same time for cryptos to crash. And we've seen that in the recent past multiple times, right? I mean, we've seen cryptos make like incredible moves to the upside, like big percentage moves in very few days, but the exact opposite as well. Very
we've
big
had
percentage.
80% pullbacks
Yeah,
from cycle to cycle.
yeah, exactly. So, as I said, in my opinion, assuming what cryptos are going to do during a distress period is extremely risky to try to assume, because we lack the data. We don't know how the key players are going to react. We don't know how much of the money that's going to go out is going to affect price. We don't know what other things might come in play. So personally, I'd say that if you want to bet on cryptos doing X or Y during such a period, make sure that the money you're trading on that is not like a big percentage of your account.
Risk capital.
Yeah. So be very, very nimble with that.
Lydia's
Anyhow,
here.
okay, great. So let's hear what Lydia has to say about
Okay.
what she thinks
All right.
about the pound, and what she
Okay.
thinks about the yen, by the way, now that we've had a big breakout.
Okay. Well, I'll ask her. Lydia, welcome back. And I'm getting you set up. And I'm now unmuting you. Oh, I was. Okay.
Hey,
There
Dale.
we go.
Oh, no.
Hi, how are you, Lydia?
I'm good. How are you?
Good. Great to have you back post Brexit.
Indeed.
Okay, so
Finally got it.
yeah. So now that that's out of the way, you want to start off with the pound against Kiwi?
Sure.
Okay,
Sure.
that's
Yeah.
what you have up. So
Yeah. That's I just put out a post, a chart about this. Just interesting to see how we continuously keep tapping at resistance. When we kind of get these multiple attempts at a level, it always
yeah,
something that piques my interest. So I was looking at what's going on with the pound versus the kiwi. And just also to say, really, we haven't seen like across the board pound strength or weakness. It's really become a currency by currency basis or case basis, which is, I find it's not something that I've seen in maybe a couple years. I don't know. I think it has something to do with it has a lot to do with the fundamentals. A lot of things going on around the world. So let's. We're looking at pound strength here, and I commented this morning. Actually, is this really pound strength, or is this
Kiwi
Kiwi
weakness.
weakness? Right, exactly.
Yeah,
So we had the strong number, retail sales number, several hours ago this morning, and we're not seeing across the board pound strength. And I would think you would after we've had about 3 months of negative retail sales numbers, and retail sales is really important to the pound. So we're not seeing that here. So here we're seeing Kiwi weakness. We're coming back against the resistance level at $2.03. Really, it's 204, which is this large 123 Fibonacci extension level. We keep tapping at it, and that's from 2019 kind of bear run, which is a bull run in the pound kiwi, but it's really a kiwi weakness all of last year. We hit on the extension level, and now we've seen a correction. at
right.
the end of last year. And, I've been really waiting for a breakout. We should get new highs above $2.06, $2.05, and we keep finding resistance here. Um, then just dialing in, we see that we're really just range bound. We're really between 204 to the top side and $2 to the bottom. And we just keep oscillating here. So, this is a case of a range trade where you play the range until it, it breaks. And we see what happens. We're now back at the top of the range. And maybe
So you need closes over 204
uni
to
closes
go
over
with it.
204, probably even 205, really.
Okay. Okay.
Because or else you get this fake out situation that we got here back in February or early February, end of January.
So would that project? Do you have anything up at 205, which would be kind of a measured move of this rectangle after it breaks through the door it's been knocking on?
Ah, what I would do, I guess I would go back to the daily chart there, and I would draw an extension on this
Okay,
wave. Yeah,
that's what I mean.
yep,
Yeah.
exactly. So you draw, let's see, we can get that here really quickly. Let's see. I would put an extension on this wave, which would be, and then we project it out to 208, about
Okay.
208.40
Okay.
here.
I'm
Yeah.
wondering if on the weekly there's any resistance there, or are these like new highs for the move? There's your weekly.
No,
Oh, wow.
yeah,
Okay.
this would be a breakout.
All right.
Yeah.
Okay. 208.
Mm-hmm.
All right. Nice look.
Yeah. So that's what I'm just looking at. Yeah, that's what I'm looking at. I think if you look at the Kiwi dollar, you see like we're really at lows here and we're putting in higher lows. So I'm kind of biased for us to break down, but we need
Okay.
to go below $2 for that to happen.
Okay. And so it's um you think Kiwi's overdone, like laws, that they're overdone to the downside and that they could recover, and that's going to delay the breakout over 204.
Right.
Okay. So the yen lit up this week, Lydia.
Yeah.
What's Guppy look like to you?
So now that we've broken above 144, and it was kind of the same case, we were kind of tapping at resistance here at 143.80. And we're really in this zone. So maybe if I zoom in here, we can see it a bit, but I don't have it drawn the line, but we can see the line here. It's really 144.50. We've hit it this morning, right? We were back up here this is end of January. So we got to get above 144.50 to make a run for 148. The infamous 148 line in the pound yen. That's this area here. So
Okay.
really 148 before we're talking about a real breakout in the pound yen. Right now, this is and again, so I'm like, why do we have pound? We have pound strength here, which is that's in line with the news this morning. But I think this is also a bit of the virus scare now that I think there was news also this morning that it's in Japan, it's in Korea, because what I would also when I'm seeing dollar strength, I wonder sometimes I'd like to see yen strength, or I like to see if there's yen strength. It's not a requirement, but I like to see if there's yen strength because then you can say, oh, this is maybe a risk play.
Yeah.
But this is definitely just yen weakness, and if we can get above 144.50, so we might just be touching resistance, hitting, finding some offers, just a bit of a retracement and getting back one over that area. But we get over 144.50, I think we're gonna be clear to get to 148. And then 148, as we know, has been that long time resistance level for the pound yen. When remember back we were looking at it, I guess that was 2018, 17. Wow, it doesn't feel that long ago. But it was it was support for the longest time.
Yeah.
Support way back.
If we got another pullback in there, Lydia, it would almost look like it's putting in a right shoulder of a Head and Shoulders bottom here.
Right in here.
Yeah, one more little pullback, so you have symmetry at the right there.
Hmm.
If it pulled back there, it'd be
Right.
symmetrical with the left shoulder. And
Right. We have to get.
anyway, I want to switch gears because you brought it up, and I know you're very health conscious, and you market some products that help people stay healthy and build up their immune system. What is your take about what is happening with Corona and your view on how it will affect markets and et cetera? What do you think about this?
So I think when it first came out, it was considered a new virus. I don't think it's a new virus per se. I just think it's something that uh, travelers received, and now it's spread into other countries, which is where the panic is coming from. I think that we have to be careful of any vaccine that comes out. I mean, I would be concerned about it. Just I don't like new vaccines, so that's just.
So you don't even get a flu shot. You don't get flu shots or anything.
My last flu shot was probably 2017. Sorry for everybody out there who's like, but I get sick after I get flu shots, so that
Okay.
no, I don't want to. So
Okay.
and I understand, like, you just injected me with the flu, like, I get it, but uh
Yeah.
yeah, I'm one of those who are just like,
You're an anti-vaxxer.
no, I'm not an anti-vaxxer.
Okay.
I believe in vaccines, like the childhood
Right.
vaccines, right? That whole schedule,
Right.
children should be vaccinated, period,
Okay.
especially if they're
Okay.
going to be in school with other children. Um, but the flu vaccine, something you got to get regularly. I'm not around, children are walking bugs. So if
Yeah,
you
they
have
are.
kids,
They're laboratories.
you know, so if you have children, if you work with children, if you work in hospitals, yes, you should be vaccinating every year. That's not my work. So,
Yeah.
you
Okay.
know, I am very conscious about what I allow the doctors to inject in my body, even in the children, like long. So anyway,
All
uh,
right. Do you see
so
any the economic implications of supply chain, et cetera,
for sure.
filtering through into the economy? And can the market really have it both ways? Remember back in 2008 when we were 2009 starting to come out of the Great Recession, the narrative was, well, China really didn't get hurt by our housing and banking crisis, and
Mm-hmm.
they're an engine that could help pull us out of a recession. So if that was true, couldn't China weakness drag us into one?
Oh, for sure. Especially with more of the multinationals, the US multinationals, when we look at our stock market, having heavy Chinese exposure, I think we're going to see earnings underperform. Apple came out yesterday or a couple
Yeah.
days ago already warning that they're not going to meet guidance. I think we're going to see that from a lot of multinationals that have that Chinese exposure, whether it's anywhere in their supply chain. You have a big economic engine like China basically grinding to a halt. You're going to see some implications coming through in earnings, and that should come through in stocks. So now is it, something that's going to give us the downturn that everybody's been looking for? I don't think so. I think it's just going to be another buy the dip situation, really. So
Okay.
take a
Okay.
look at some of your favorite names and be a lookout and see what happens when they report first quarter earnings, second quarter earnings. I think there could be opportunities for the first half of this year for companies, for strong names that have require China anywhere along their supply chain, whether it's manufacturing to retail, what have you. I think
So
there's
use it as a
opportunity.
buying opportunity. The long-term trend is definitely still intact. So uh, use this as a break to buy should we get a 5-10% correction.
I think so.
Okay.
I think so. Our markets seem impervious. So there's your top warning right there.
Okay. So we looked at the commodity currencies and we
Mhm,
looked at the guppy. Euro pound, I'd be
mhm.
interested in what you're seeing in EG here.
So euro pound to me has, I see, like, I like this breakout right now above 84 pence. So
Okay.
when you get this break below into 80, break below 83.50, then 83, and you start to think, oh, the pound is going to strengthen from here. We're going to go lower. You look at one. Well, first I looked at the bigger picture. So if I come into the weekly chart, we can see like this entire breakdown has really
Yeah.
been just a move into the 61.8 level right now, which is a great setup for any pound pair. And we had, but because we have so much euro weakness as well right now, a lot of euro weakness. So it's been difficult to time if you're trying to find a bottom here off this much longer term play. I mean, this is a retracement that's been in effect for about
Could
4
we
years.
have a double bottom developing here?
That's what we're having. So that's what I've been waiting for actually,
Okay.
past couple weeks. I've been waiting to see if this is going to give us a double bottom or if we're going to break, because this is the move into 86 has been just a retracement of this down move, right? So
Right. Yeah.
looking forward to see, but we did not get a new high out of this Fibonacci retracement. So we got this higher low coinciding with a higher low in momentum,
Yeah.
and waiting really for a break above 84. So we get this hold above 84, everyone. We're definitely returning to 86 pence. And if this turns out to be a double bottom play, which is just a retracement of the bigger trend, um, pound weakness to me, I think, is something that can definitely occur. I think there's way too much optimism around UK fundamentals right now, despite, yes, we're through Brexit now. We have a timeline for the withdrawal agreement and the completion of trade agreements and trade arrangements. I don't
Mhm.
think I think the market is a little too optimistic on what that means for the UK. So
Yeah, I think this could end up being a big trade if this double bottom holds. There are, wave count projections take it back over 100, Lydia. So when
I
you look at the weekly and monthly chart, that all of this, we've been in kind of a pull up your monthly just for kicks.
Mhm.
Okay, so you see that big move from 70 up to 90,
Yes,
and okay, so we've been kind of in this range here for 3 years.
for 4 years, and this
Yeah,
range
look at
has
that.
just really been. This is a retracement level. This
Yeah,
is retracement. It's a Fibonacci retracement. The recent double bottom that we're seeing now is the 61.8.
yeah,
This was here was the 38.2, and we were oscillating above 86 when we're coming into here. We
yeah.
broke last year, maybe that was 2018. We broke, and then skyrocketed again. To me, so when we did this first 82.70 low, there was exuberance. I mean, I looked at it like, oh, okay, maybe we'll get strength, and then realize, you know what? Let's watch.
Yeah.
So I've been watching. So this last stab lower, it has been where it's been difficult to time just because we've been getting this kind of action here. But really, yeah, I agree with you. I'm really in the camp that pound weakens from here and we move higher. The headwind to that is what how euro trades.
Yeah.
We're
Yeah. It's always been my contention that a true bear market in the dollar is going to be led by euro
oh,
strength, not
absolutely. Yeah,
cable strength.
yes, I agree
O-
with you completely. Yep. And then
Okay, go ahead.
that happens, we're going to see euro pound really take off.
Okay, so Canadian's been acting pretty good here too. Is it a similar look to pound CAD to what you showed on pound Kiwi?
It is, yeah, with the other, just like the other doll here. Yeah,
Okay,
we're seeing here, we got Canadian dollar is just strengthening here. So much more strength in
okay,
the Canadian dollar than
yeah,
we're seeing in the Kiwi. So
maybe 168 on that. I think we just lost Lydia. Yeah. So we got plenty done here. We'll just wrap it. So Lydia, you'll hear it on the video. Thank you for being with us today, and you can follow Lydia at Faith Might. and we'll see everyone to wrap up the week tomorrow. You're welcome, Alexandros. All right, everyone. Don't just count your pips, count your blessings. We'll see you to wrap up the week tomorrow. Adios. You're welcome, Sinatra.